I'm Carlin Altman, and on behalf of the Alabama Housing Finance Authority, I want to thank you for joining us today. We're so grateful to have Norton presenting today. Stuart is the director of the Alabama Center for Real Estate. He's a Birmingham native and earned his bachelor's degree in political science from Birmingham Southern College and holds a master's in secondary education from UAB. Before joining ACRE, he spent nearly a decade teaching history, where he developed a strong commitment to mentorship and helping students grow into future leaders. He also serves as an instructor for professional development and leadership courses in the Culver House College of Business at the University of Alabama. At ACRE, his vision is guided by the belief that industry engagement and fostering relationships are the key to serving Alabama's real estate community and preparing the next generation of professionals. So today, Stuart's going to cover the different housing trends that he's seeing across the state and also give us a 2026 forecast for real estate across Alabama.
All right. Thank you, Carlin, for that introduction. I really appreciate it. And just want to thank AHFA for the invitation today. It's an honor to present to your group. And also just wanted to share a quick thank you to the attendees. I appreciate y'all being here. And we will have some time for questions at the end. And so, like Carlin mentioned, please put those in the chat when, as they come up. So yeah. So let's get into the housing market, looking at the data that I've seen, in the housing market. A review, what we're going to do today is we'll do a review of trends from 2025, mainly home sales activity and home sales prices, and then take a look at the forecast for this year. All right, so just start with a standard disclaimer. I do this in all my presentations. Just, these are my views, not necessarily those of Culver House College of Business or the University of Alabama. And so just wanted to start with a few resources that are on the Alabama Center for Real Estate website. Carlin does have these slides, and so if you want these slides, Carlin, please feel free to share these with attendees, and you'll notice that each of these link, to the specific resource. So one of the resources we have is Home Sales Reports. It's a monthly report from there are 24 different MLS groups from across the state that share monthly sales information with the center. And is small, the smaller one on the smaller side, Monroe County Association of Realtors, to the larger, being the greater Birmingham area, so a little bit of everything with those home sales reports, and all areas within Alabama with a MLS provider. We have that monthly report summary. We also produce a residential sales forecast. I'll show you those numbers a little bit toward the end of the presentation. That forecast is put together. It's a data-driven forecast. It's created using Excel, and it looks at trends in the data over the last 8 to 10 years to identify what's happening, for us to identify what's going to happen for the next year. And our goal with the forecast is for it to be with a variance of under 5%, with the forecast number of sales compared to the actual, and we were just under 4% for 2025 statewide. So very happy with that. A newer resource is some data visualization. I'm going to show you an example of that in a minute in our next slide. But we use Tableau. This is linked. It's linked right here, but you'll be able to see, graphs of home sales activity statewide, and then for all those 24 markets mentioned earlier, small markets like Monroe County all the way up to the Birmingham metro area with over, that's a 4 county area with generally over 1,000 sales each month. But I'll show you an example of that in a minute. You can also change it. It's not just for home sales. It's also for sales prices, inventory, days on market. Same information that's put out there in the housing market reports, except it's just a little bit more visual. We also have a building permits and housing starts database. Those housing starts are calculated from the building permits. That's also available online. And one note about that, the building permits, that is from census data. And so they're still playing catch up. The most recent permits you'll see are from October, with the government shutdown back in the fall. And so I'm hoping they generally run about a month and a half behind, but we're about 2 to 3 months behind in those right now just because of that government shutdown. But it will get caught up hopefully soon. And then we also have dashboards. This is a work in progress. It's not on the website currently, but hopefully it'll be here this spring. But it's basically a dashboard of economic and housing data for all counties in the state. So it's a nice, this is from the Federal Reserve economic data. And of course, it's all publicly available, but we organize it in one place. So if you want to see building permits, home price index trends, even county level GDP and unemployment, it's all right there in one dashboard, again, organized by county. So those are just a few of the resources that we offer relevant to housing. And so this is what the dashboard looks like. Notice this is statewide, and the January information will be available around, about the 20th to 24th of each month. But notice here, if you kind of follow the cursor, goes most of our markets, we have sales data going back to 2001. And of course, you can see the seasonality in home sales. Home sales are obviously very seasonal, peaking around the summer months and then tapering off toward the end of the year. But you can see, in addition to the seasonality, but also notice, that record high in statewide home sales, pretty much by a long shot, almost 8,000 back in January of 21. And one of the themes from today that I'll talk about is notice December home sales were roughly at 2,000. Both December home sales and 2025 home sales were roughly at levels seen in 2018. And that's not surprising given, the increase in interest rates that happened starting in, 2022. And so, yeah, and notice this is just the statewide, but you could change this market and you could look at, the Montgomery area, Birmingham area, Phoenix City, all those, any area in the state of Alabama that has an MLS provider. And you can also change it for category, sales price, both median and average, and then also average days on market, inventory, and even months of supply. So that's just a couple of the resources that we offer here uh, on the ACRE website. So a quick overview of statewide housing market trends. So there was a slight increase in sales activity during 2025. A lot of that was tied to interest rates, generally decreasing throughout the year. If you look, just kind of a quick review, interest rates this time last year, looking at an average of about 6.8% in the first quarter of last year. And that went down to about 6.25 by the fourth quarter of 25. And so there wasn't, there was a little bit of growth in home sales statewide. We'll look at it by different markets in a minute to see how the different markets fared. But looking at a slight increase, 2% in 2025. We'll talk about the forecast in a minute. As mentioned earlier, we were basically at 2018 level of home sales, but and I don't say that in a negative way. When you consider how interest rates have increased, going from what 2.5% in 2021, up to the 6 to 7% range in 2025, you're gonna, home sales only have one thing they can do. They have to slow down as part of the market correction. And that's what we saw. Uh, Surprisingly, price growth did accelerate a little bit more than anticipated in 2025, looking at almost a 6% increase in 2025 versus the prior year. Notice in 2024 statewide level, and we'll look at prices by area a little bit later. But 3% growth in 2024, which is very much near the historical average. Uh, if you look at modern America, which is, post World War II to current day, home price appreciation averages roughly 3% a year, generally speaking. And so we saw that, it was at, that historic expectation in 2024. but almost double that, pushing 6% in 2025. Uh, Homes are spending more times on the market. That's not much of a surprise, but what is the amount of increase. In 2021, when we had, many borrowers were getting rates at, you know, call it 2.5 to 3%. Uh, well, we'll call it 2.5 to 3.5%. But yeah, so homes are spending almost 80 days on the market, versus roughly 40. And there's more inventory out there, but it's still a seller's market. Some of that inventory is a little bit overpriced. That's why it's sitting on the market for some time. Um, but yeah, we're still in a seller's market with 4.1 months of supply in the most recent month. That has come up though. We were looking at, during the 2021, 22 years, that got under 1 month of supply in some markets, especially Huntsville. And it was common to see 1.5 months of supply in many markets. And so it's gotten a lot better. That's why, prices are still rising, but just not at the pace that we were seeing back when the market was, red hot to say the least, during the pandemic years. Talking about interest rates for a minute, I like to include this in a lot of presentations just to give a little perspective. And I hope you can see the cursor right here as I'm kind of hovering over that. But yeah, but notice the general decline in, rates on a 30-year mortgage, going from almost 18%, in the early 80s, general steady decline if we just look at it by decade, call it 18% in 1980, and then roughly 10% by 1990. 2000, we were looking at roughly 8%. 2010, we're down to 5%. Of course, 2020, very much an outlier, call it the 3 to 4% range. And then the steady increase from there. And so the good news is, for borrowers, affordability has gotten a little bit better as interest rates have decreased a little bit. And, now they're currently in what, call it 6.25 range for most borrowers. Of course, that's going to vary based on credit history. But the good news is that rates are trending downwards. I wouldn't be surprised to see, a slight decrease in rates during 2026. I'm not sure if we'll get, into the 5% range, but I think the low 6% range is possible. I'd like to include a few headlines as well. This one's recently from the Wall Street Journal. And the headline kind of caught me by surprise. And I was, the housing market is swinging towards buyers. I was like, okay, that's interesting. We're going to revisit this a little bit later. And because, again, that wasn't really my take. And they make some good points here. 2/3 of home buyers in 2025 purchased at a discount. They were able to negotiate off of that, asking price, which was not happening, obviously during the second half of 2020 and most of the year in 2021, even the first part of 22. But I really like this quote from the article that echoes something similar that I heard at a residential conference we did years back. But it's sellers aren't the ones that dictate prices. It's the buyers that do that, based on their negotiations. Of course, the sellers are the ones asking, but the buyers are really the people who dictate prices. And again, we'll revisit this in a minute, but big takeaway, this is a national article. 2/3 of homeowners are purchasing at a discount. I would imagine that would be the case for Alabama, but we're still seeing price growth, 6% at the statewide level. So is it really a buyer's market? Let's think about that as we kind of go through the data. A quick home sales summary by market, and this is 2025 versus 24, the prior year. And so not going to read through all of these, but notice how most markets, they're in the single digits when it comes to when it comes to percent change. Slight increase in Birmingham. We saw what statewide was 2.2%. So a little bit above average in Birmingham, a little bit below the statewide average In Huntsville, there was a decline in a few markets, Montgomery being one of the, or I'm sorry, Mobile being one of those, down about 5%. Montgomery, very slight increase, but there was a significant increase in sales prices there. And of course, that will hold sales back a little bit. Baldwin County continues, when you look at the fastest growing parts of Alabama, it's essentially Baldwin County and Huntsville, where we're seeing a lot of growth in the state, at the two geographic extremes in the far south and the far north. I really don't see that changing in terms of population growth, but home sales in Huntsville have slowed down, significantly. But they're still growing from the prior year. Slight decrease in a few other areas. Uh, Notice, again, the big takeaway from this, most areas are seeing an increase from last year. And for metro areas, basically the Shoals area, Florence, Muscle Shoals, saw the biggest growth in home sales, not for all markets, some of the smaller markets, because it's a smaller sample size of the data, so they can have bigger swings. But the area with the most home sales growth was Florence, Muscle Shoals, and followed, you know, close second would be Auburn, Opelika area, which continues to see a lot of new home construction. I would anticipate continued growth, in Auburn and Opelika. And one key indicator, it's not on the slide here, but new construction, percent of new homes, what percentage of home sales are new home sales. Statewide average is about 17%. Uh, Last year, you're looking at 30 to 35% in the Auburn Opelika area. And so that 7.1% increase, a lot of that is driven by the pretty strong new home market. Um, Again, I encourage y'all to put your questions in the chat and we'll go through those a little bit later. But just another housing market trend I'd like to review here. This is a little old. It's from 2024, but I think it's a trend that's still around. Headline, boomers bought up the big homes and now they're not budging. Well, interesting take there, but a really good point they make. But 28% of all the homes in America with three or more bedrooms are owned by people age 60 to 78. All to say, they probably have a little bit more housing than they need. Uh, I've seen this, my parents would fall in this generational group. Just looking at a lot of their friends, they actually have downsized up in the Birmingham area, but a lot of their friends have not. And one of the reasons you know, uh, is the prices in the housing market. Are you with prices where they are today? Of course, they'll do pretty well when they sell that home that is likely to be, significantly, more than likely paid off or close to being paid off. But then, you're turning around and facing a market that's had, lots of growth in prices, not a lot of options. And so, just long story short, many people from older generations just aren't downsizing as you might expect based on, past trends. And I'm not sure what we really do about this. I just wanted to mention it as because it is an interesting trend in the housing market. Uh, Almost a third of those homes with three or more bedrooms owned by people that, it might have one or two people living there at the house. Now we're going to shift gears a little bit and talk about median sales prices and how they compare by market. And so, Birmingham area, uh, notice historical average 3%, right? That's what we can expect on a given year. A little bit ahead of that in Birmingham. I put, 0.02% in Huntsville because it, rounds down to 0.0, but I did want to show that there was a slight increase in prices there, but they're essentially holding steady. My theory for that area is that there was a ton of price growth in the Huntsville area um, during 2020 to early parts of 2023. We're talking about above 15%. And so it's just grown to a point where the market's not accepting. It grew so much during the post-pandemic years that it's just not going to see that same growth going forward. Notice in the Mobile area, that was one area that had a decline in home sales prices. But notice price growth, is, to summarize it, it's elevated. Um, and this did, I was surprised to see, price growth accelerate in 2025, because it was roughly, if you look at it statewide, it was 3% in 2024, went to just under 6% in 2025. Uh, and so Baldwin County, again, a decent increase in home sales, but similar to Huntsville, there's been a lot of price growth there, and there's only so much the market can take. And so decent increases in sales in Baldwin County, but not as much on the pricing side. And then some of the smaller areas, Calhoun County and Dothan, they were both down slightly on the year in sales, about 1% for each of those markets, but still saw, price growth at basically double, the historical average. And a lot of this price growth is driven by a relative lack of inventory on the market. Inventory has increased significantly, yes, but a good chunk of that inventory might be priced a little bit ahead of the market. And so buyers are still looking at, relatively limited options, generally speaking, which is going to fuel that price growth. Other areas, again, notice two metro areas in Alabama with double-digit price growth. They're both in the mid-sized metros like Gadsden and Florence, Muscle Shoals. And so both an increase in, home sales and prices in the Shoals area. Not surprising, given the momentum of that community. I haven't been there recently. It's on my list of places I'd like to visit. But from what I've read about Florence, a lot of, a revitalized downtown area, which has also been seen in a lot of other markets. Dothan's a good example. A lot of money's been reinvested in the downtown area. And but it's just interesting to see how the price growth shakes out from one area to another. When looking at different housing markets, or just neighborhoods in general, I had a really good uh, economics teacher. It was actually my senior year of high school. I had a great econ professor in college as well. But I remember the one in high school talking at good length about, construction, as a positive sign for a neighborhood, whether that's new home construction or renovation, it's a sign of reinvestment. It's a sign that people are confident investing their dollars in those areas. And so anytime you see, a revitalized downtown, reinvestment, essentially anywhere in that, and toward the urban core, it's just really a positive sign for the community. And same thing with road work. Nobody enjoys having to deal with, road work. We had that in downtown Tuscaloosa, but, is it worth it at the end of the day? Of course, you have to reinvest in that infrastructure. And so even with some of the headaches that come with construction and reinvestment, it's always worth it, and it's definitely a sign, a positive sign for these areas. So taking a look back at, the headline we saw earlier, is it a buyer's market in Alabama and the United States? I would say, not necessarily. We're looking at, 3.3 months of supply nationwide. That's in December, 4.1 in Alabama. And I guess if we read that headline a little closer, it's swinging towards buyers, sure, because months of supply has steadily increased. But we're still looking at, overall a seller's market. And months of supply, again, 6 is your equilibrium point. Below 6 months of supply, uh, that's when you have your below 6 months of supply, that's when you have your seller's market. And then when it shifts above 6, you have your buyer's market. So let's see how months of supply compares with the different areas. Notice how most markets are in the 3 to 4 range. Baldwin County, the only one being in the 5 range. And so again, the big takeaway from this is up significantly from the post-pandemic period when a lot of markets, briefly went under even 1 month of supply. I remember when the Huntsville area was down to 0.8, 0.9. Statewide, we were at like 1.5, for a good stretch of that 2021 and early 22 era. But yeah, how do you calculate months of supply? It's a pretty simple calculation. You just take your inventory available for sale is inventory to sales ratio. So inventory for the month divided by sales activity for the month gives you your months of supply. And then if we look at it, notice at the bottom there, a balanced market will have six. Uh, so we're looking at generally a seller's market. Although it is, I do agree somewhat with that Wall Street Journal headline. It is trending towards a buyer's market, but we're not there yet. And then now let's get into the forecast. And so again, um, this forecast, it's a data-driven model. It's created using trends in the data from the last 8 to 10 years. And so notice we just have the two columns here. Well, the three columns, the market, the actual change from 25, and then the forecast. Um, and so I do think that we're going to see an increase. There was a slight bump in sales in 25 statewide. I think we're going to be right around 5% increase in 26. A lot of that's going to be driven by interest rates. A slight decrease in rates I think is likely. I don't see a major decrease coming. I don't see a major decrease in rates happening, but I think it's reasonable that rates get to the low 6% range, by mid-year. Um, and just looking at some of the other areas, even Mobile County or the Mobile area, and that is Mobile County, by the way, roughly 5% decrease in 25. I think we're going to see a slight increase there, just above 1%. And again, all metro areas, the forecast is going to call for an increase in sales activity in those areas. I think another thing the housing market has going for it in 26 is I've heard a professor here at UA describe it as recency bias, because think back to that chart we saw a little bit earlier about interest rates over time. There was that huge, very significant increase in rates, from the 3% range, up to 7% or more in a very short period of time. And so now that a little bit more time has passed, rates in the low sixes are a little bit more, people can stomach those a little bit better than they could uh, versus talking to neighbors who had moved only a year earlier. And then, this is back in the 2000, you know, call it, late 2022 when rates were increasing pretty quickly. Now that a few more years have passed, a buyer in that 2022 era, talking to a neighbor, they got a rate, call it 3.25, 3.5, and here they are borrowing at 7% only a year later. Now that a few years have passed, it's become a little bit more normalized, that rates, that a six, say a rate 6.25, 6.5, that's a not so bad, especially when you consider the long-term view. Um, and so that's just my take on why I think home sales are going to increase here in Alabama. Some other areas, notice those smaller markets like Dothan and Gadsden. Yeah, sales were down slightly in those areas, but I still think we're going to see a small increase. And then Auburn, Opelika, and Decatur, and even the Shoals area. Those are above areas with an above average forecast. Uh, with Auburn, Opelika, a lot of it has to do with, the quality of public schools in the area and also the amount of new construction you're seeing. Um, and same thing with Decatur. It's a somewhat less expensive. It's significantly more affordable than Huntsville. You can easily live in Decatur and commute to Huntsville for work. And so I think that is going to support a little bit more sales growth in that area, say, and than in Huntsville, a generally a little bit more expensive market. So that's a quick review of the forecast for 2026. Uh, Not a huge increase in, sales activity, but significant. Basically for statewide at least, looking at, 2% growth from 2025, I think we're going to see something closer to 5% for 2026. Uh, some other uh, some other possibilities for the housing market in 2026. Again, as I mentioned, a slight decrease in rates will boost buyer demand a little bit. Not a huge boost, but a significant boost. And also that extra, we're 1 year further along from that hyper low rate environment, and that was anything but normal, right? When rates were down at the low threes, that was not a normal market. That was the COVID era. That was very much an outlier. And we're one more year removed from that. So it takes a little bit of that, takes a little bit of a sting out of it from the buyer on the buyer's end. Uh, Price growth, it averaged almost 6%. I think it moderates a little bit down to 5%, but still above that historical average of 3%. And really if you talk about prices, going back, and you can see this on the graphs I showed earlier if you want to visit those links. But the time that we've seen price decreases in Alabama, it's only a couple of years, and it was basically in the aftermath of the Great Recession, the 2010 and 11 years. And that's when months of supply, and it was not a, it was a significant decrease, about 5 to 7% in prices, but we're talking, months of supply was over 11 in some markets. And so huge surplus of inventory relative to the sales activity. That's the one time we've seen declining prices, in the data that's reported to us by the MLS areas. So price growth, it's elevated above historical average, but not quite the same as a year ago. Slight increase in inventory, the lock-in effect. A lot of people moved during the post-pandemic years. We saw that, in the almost 8,000 home sales one summer month in 2021. But that lock-in effect will slowly taper off. You also have, life events. One thing that supports a good chunk of home sales in any market, whether it's a metro area or a rural area in Alabama, is, life events, young families having children and outgrowing their house, people relocating or moving for work. That's gonna, regardless of what rates are, or, and of course, all buyers are sensitive to prices to some degree. But if you have to move for work, or if you need that larger house because of a growing family, you're in a situation where you need to move, and you're just going to have to work with the market. But I think that lock-in effect will slowly taper off as we're getting 1 year further distanced from that hyper low rate environment that again was an outlier. And then affordability is going to remain a challenge for most buyers. That is one of the more significant challenges the market faces. But the good news with affordability, it has gotten a little bit better. Another resource we have on our website, and this will be on the statewide page, but it's the Alabama Housing Affordability Index. It's where we calculate a score, and we compare the Alabama to the nationwide. And so most recent calculation for the fourth quarter, the score for Alabama was 131. And that means that somebody, a family or a household, not necessarily a family, but a household earning the median statewide income had 1.31 times the income necessary to qualify for a loan to purchase the median priced home at the statewide level. And then that is up from 123. So which was back in 2022 at the end of the year. So affordability has gotten a little bit better, but it is still a challenge. For a little bit more context, if you go back to 2015, that same score was almost 230. It was 228. So that family, earning the statewide median family income, buying that median priced home, they had over 2 times the income to qualify. Now they have only 1.3 times the income. But so it is a challenge, of course, but it has gotten a little better. And same numbers for the United States was 108 recently. And so at the nationwide level, that family or household is barely qualifying, at just under 1.1 times the income necessary. And then a quick review of some of the more affordable and least affordable metro areas. Sorry about that phone call. Gonna silence that real quick. But some of the more affordable areas in Alabama, Florence and Muscle Shoals at 147, Anniston, Oxford, Jacksonville at 149. So that in those areas, that family has almost 1.5 times the income necessary. Some of the least affordable metro areas, the Auburn-Opelika area, 105, and then Baldwin County at 111. And a lot of that, again, in both areas, a lot of new construction in those areas and those median, well above that statewide level. Uh, looking at above 30%, 30% of home sales being new homes. And so that's just kind of a quick review of affordability as it varies across the state. And yeah, affordability will continue to challenge most buyers.